$11 billion. Gone. In less than a week. And the man behind it was on magazine covers just months before, being called the next Warren Buffett. This is the story of FTX, one of the biggest financial frauds in modern history. And the scariest part? Millions of smart, educated people never saw it coming. So let's go back to the beginning. FTX was a crypto exchange. Think of it like a platform where people could buy and sell cryptocurrencies, Bitcoin, Ethereum, and hundreds of other coins. It launched in 2019 and grew incredibly fast. By 2021, it was one of the biggest crypto exchanges in the world, handling billions of dollars in trades every single day. SBF was the founder. He was young, wore t-shirts and shorts to meetings with politicians, slept on a beanbag at the office, and talked about giving all his money to charity. He seemed different, humble, honest, the kind of person you'd trust with your money. FTX raised money from some of the most respected investors in the world. It had naming rights to a major sports arena in Miami, Super Bowl ads, celebrity deals. At its peak, the company was valued at $32 billion. Here's where it gets interesting. SBF also ran a separate company called Alameda Research. It was a trading firm, basically a group that made big bets in the crypto market. FTX and Alameda were supposed to be completely separate. Two different companies, two different operations. But they weren't. What was actually happening was this. FTX customers would deposit money onto the platform. Real money, billions of it. And instead of keeping that money safe and available for customers to withdraw whenever they wanted, FTX was secretly sending large amounts of it over to Alameda Research. Alameda then used that money to make high-risk trades, buy assets, and fund lavish expenses, including luxury real estate in the Bahamas where the FTX team lived and worked. In early November 2022, a leaked document showed that Alameda's balance sheet was built heavily on FTT tokens. FTT was a token created by FTX itself. Basically, Alameda's financial health was built on a coin that FTX had simply invented. That's like saying your net worth is mostly made up of monopoly money you printed yourself. When this came out, the CEO of Binance, the world's largest crypto exchange, announced he would sell all of Binance's FTT holdings. That single announcement triggered panic. Everyone started to rush to withdraw their funds from FTX at the same time. And here's the problem. The money wasn't there. FTX couldn't process the withdrawals. Within days, the platform froze. Customers were locked out of their own funds. Billions of dollars in deposits had simply vanished. On November 11, 2022, FTX filed for bankruptcy. SBF resigned, and what followed was one of the most dramatic financial collapses the world had seen since 2008. Investigations revealed the full picture. Customer funds had been used to pay off Alameda's debts and losses. Money had been spent on political donations, luxury properties, personal loans to executives. The accounting was so bad that the new CEO, who had previously managed the Enron bankruptcy, said he had never in his career seen such a complete failure of corporate controls. SBF was arrested in the Bahamas, extradited to the United States, and in November 2023, he was found guilty on all 7 counts of fraud and conspiracy. He was sentenced to 25 years in prison. Now here's the deeper truth most people miss. Trust is the most powerful currency in finance, more powerful than any token, any coin, any platform. And when that trust is faked, the fall is always catastrophic. The lesson from FTX is not to avoid crypto or new technology. The lesson is to ask harder questions. Where is my money actually going? Who is actually in charge? What happens if things go wrong? Because the most dangerous frauds in history never looked like frauds at the start. They looked like opportunities. They looked like the future. They looked exactly like FTX.